Hey everybody, this is not Alan Davis. He was supposed to be here for us, but he is very ill. And those of you that know Alan, he's really upset he couldn't be here. But Jack Pettyrock with M1 Capital, trying to fill in for Alan today. We're a private equity firm based here in Omaha. We were formerly known as McCarthy Capital up until about a month ago. We also have a growth equity fund, which I'm sure you guys are more interested in learning about. A little bit about me: from Kansas City. Got tricked into coming to Omaha originally to go to Creighton, fell in love with it, and haven't left.
Hi, everyone. My name is Josh Bartels. I'm the director of the Nebraska Angels. So we're a investor network that helps fund local startups here in Nebraska and across the Midwest. Originated in 2006 and have about 100 different members that invest into startups here in the state. So thanks for the time.
Charlie Cuddy, managing partner at Move Venture Capital. We're an early stage agnostic fund, so we invest in high growth startups kind of at that earliest stage. We're currently investing out of our first fund. We've made 38 investments to date, about 75% of them here in Nebraska and the rest kind of across the Midwest. And prior to this, was working at a venture fund in Silicon Valley. Built kind of a incubator on top of an accelerator out there, and a lot of what we're doing here is modeled off of that. We'll make another 12 to 15 investments out of this first fund, and kind of kicking off the fundraise for the second fund as well.
When you wear a sports coat with a hoodie, you know that you've got some serious cred. I couldn't pull that off, so nice job, Charlie. All right, so let's start with, kind of an icebreaker, what we call, if you think about investing here in the heartland in Nebraska, how does it differ? Like, what makes you here versus on either coast, Silicon Valley, on the East Coast, and any of those places? So, Charlie, you want to start there? Like, why here?
Yeah, well, one of the things that at Move that we really, we've been around for 2 years, and the reason we started was kind of the lack of that early stage capital. We have an idea, we just need, 100, 200, 300K to get started. Out on the coast, that happens a lot. Here, it's a lot of friends and family, not a lot of formalized capital around that space. And so that was really why we got started here, was how do we make sure that we take some risks and help some of these early ideas get off the ground so that when they're ready for the Angels or M1 Capital, that they already have a track record, understand kind of the investment process.
Josh, you want to take?
So for our group, our members invest right around seed stage, so with revenue, with traction, with a product in the market. So at least for us, it's super interesting to see companies that are based here in Nebraska. In differentiating from the coast, I guess, the degrees of separation of people here between, it's not too difficult to find a CEO of a Fortune 500 company here in the city of Omaha, or find a family office that could support a startup. So I think it's a small town feel within Nebraska, but it's great to be able to pull on those different individuals within our group, but then across the broader Nebraska region as well.
Nothing new from what Charlie and Josh have said, but we say this all the time. The most important thing in our investment process is understanding the people and working with great people, like-minded people that care about this community, both in Omaha and Nebraska more broadly, is really important to us. It's rooted in our founding history as well. If you look at the firm, it's been around since the mid-'80s. Before 08 or 09, probably 90% of our investments were within a 3-hour drive of Omaha. And it's something that's really unique, and we all have the pleasure of getting to do it from here versus having to work in New York or Chicago, which is what has made it attractive for a lot of us to stick around.
All right, so I think Charlie or Josh, and probably this one's for either one of you. Like, what does a really good investable early stage company look like to you? Like, what are you looking for? What makes you go, that's the one?
I think it starts with the founding team. If they have deep industry expertise, they have connections to potential customers. I think those are the two main things for our group. You can kind of tell when a founder is super excited about what they're building, they know what they're talking about, but then can also communicate in a way that makes the investors excited as well. So it starts off with the founder. in terms for our group, like we do like to see that traction and revenue with like software companies, for example. So if they have a core customer that they're selling to, that's really attractive. So they can expand in that market and then eventually go a little bit broader to the end when they exit. I think those are the two main things from our group. Just kind of like small things is the company set up in the right way? Are they venture backable? So they can sell product across state borders. The goal is to get to $1 billion company. Usually coffee shops, restaurants, franchising models aren't really in our scope to invest in, but those that are software based, have some sort of tech component is right in our wheelhouse.
We're like the exact same. We'll even go a little bit earlier. The questions we really ask internally with our investment team is like, why you being the founder, like why this founder and why now? Is there something from a technology perspective that shifted? You know, we hear AI obviously a lot. Sorry, Daragh, I forgot. I'm not supposed to say AI.
That's $50.
So
I didn't tell you about the rule, but there is a rule.
So is there a technology shift? Is there a shift in market? What about right now could make this opportunity really disruptive? And so then the why you really aligns with what Josh was saying. Like, what is it about the founding team that makes them unique? Do they have insights? Do they come from a background or a previous startup that positions them to really kind of target the opportunity that they're at? And then the other piece that we really ask ourselves internally is what if this works? So we're investing at a stage where we can't do a lot of math on revenue. The numbers are too small to really justify like throwing it into a formula and kind of underwriting it. But like, what if this works? 5 years, 10 years, 15 years from now, if the vision that this founder has of the world becomes true, how big does it get? Because in the venture space, one of the things that's really interesting is our downside is capped. We write 50, 100K checks. So the most we could lose if this founder is wrong is that 50 or 100K. So the part that we're trying to see is just what is that upside? How big could this thing get? And then how big of an expert? It goes back to that team and right now that they could actually deliver on it. And so that's really kind of the internal discussion we have. And then all of the kind of blocking and tackling pieces of, do they have felonies? Do they incorporate it appropriately? Like, we'll obviously look into that kind of stuff too.
How many felonies? That's interesting. How many would rule them out? 1 or 10? Or... All right, so if you think about it, we've all seen a lot of pitches, right? I've seen quite a few, but you guys have seen a ton more than I have. Like, what's the single, or I mean, it doesn't even have to be one, but what mistakes do founders make when they pitch to you? Like, what's the most common mistake or the thing that keep them going forward?
I have the microphone. I'll start and then. Yeah. I mean, there's a few of them. One piece that we always recommend is, as we work with founders and we start getting them ready for the next kind of stage of pitching, is do some research on who you're actually pitching to. Trying to get a meeting with a fund that is out of your thesis is a total waste of time. Pitching to an industry expert and spending the entire, first 5-10 minutes explaining the industry to someone who's been building in the industry for like 30 or 40 minutes does not set you up to be an expert in the space that gets them excited. But then I'd say the other piece is around the actual fundraise. We often see founders who don't fully understand.
Hold on, we might have a technical issue. Can you guys hear it? Charlie, okay? Yeah, all right, we're good.
Oh, okay. So,
most technical issues is not really a technical issue.
But around the fundraise specifically, sometimes not understanding, like, do I even need to raise capital? Should I raise capital? How much? We see people that want to raise too little and they don't have enough capital to actually hit on the milestones, and now they get some momentum, but they run out of money in the middle of it, or they raise too much and they've put themselves in a position that they can't actually grow into the valuation that they've accidentally set up for themselves. So just having an understanding of what you need the capital for, and then kind of backfilling into what that number is probably the top things that we see.
Nothing really else to add other than what Charlie mentioned. I think for our members, it's that sense of direction of who you're selling to. What's your pricing model? What's your business model in order to scale that business with this round of funding that you're raising through our group?
Nothing too dissimilar from what they've already said, but certainly understanding like the why the inflection point is now. And for us, that usually means, do we have a repeatable sales and marketing strategy that our capital can help kind of pour gas on that fire? Another area that I see all the time is people confusing TAM and SAM, which for those in the room, total addressable market versus service addressable market. So SAM being the amount of market you can attack today with current products and services. And obviously that's important to know the TAM as well, because that's what you can grow into with additional product development over time. But for us, we want to make sure the market's big enough. Understanding who you raised capital from and why is also important. Like, we love to see founders that had the wherewithal to raise from strategic investors that make sense for them specifically in their industry. It usually leads to better outcomes, more follow-on opportunity, and also strategic customers as well.
All right, and then thinking, I mean, I have my version of the answer to this question, but I know there are many others. But what do you guys think in terms of, the larger corporations around the area, but in general, anywhere? What can corporations, what can leaders in those corporations, CIOs, CTOs, how can they help, these companies grow beyond just the investment? And if you guys can talk about what we as a community can do, corporate Nebraska, corporate Omaha can do to grow this community as well.
Really good topic. For me, I think the single most important thing is being a customer, and that doesn't necessarily mean it being a paying customer, right? Allowing startups to experiment and learn about their product and what they're trying to build in this ecosystem will be more helpful to them as they kind of expand outside of Omaha. That's a huge one that we see a lot. Being close to other kind of startup communities around the country. There are some that do it better than others from that incubation perspective. On the corporate side, it's like he was saying, it's not just dollars and cents. It's that kind of feedback loop that is created by actually using the product or taking part in the service as well.
Yeah, I think the industry expertise is super helpful too, kind of to Jack's point of you all have a lot of knowledge within your specific industry, within your specific company. So sharing that with startups, showing them the ropes of how to best to approach you is super helpful.
The customer piece, Daragh and I talk about all the time. The customer piece is huge, but also the corporations understanding the speed at which startups need to operate compared to like what the large corporations think is fast. You can see a startup like fail in between times of someone at a large corporation getting back to an email that they think they're getting back to quickly. So like getting that feedback back, if you're going to commit to helping them, being able to have someone on your team, if it's not you, be a point of contact that they can actually be in the loop is absolutely huge. But then also providing that expertise for investors as well, helping us understand industry trends that are coming up, things that you're looking for as solutions. We see hundreds, if not thousands, of startups a year. So if we have ideas in the logistics space of things that Daragh anticipates coming, not only can we help identify people solving those solutions and get feedback to him, but we can start kind of identifying people that are solving solutions that we can go and actually look for and kind of do our own outbound. So those kind of ways are ways that we look to partner.
Okay, and then I think if so you've done an investment at whatever level. Obviously, at some point in the future, that Series A is going to open up, Series B is going to open up. How do you help the founder? At that point, they're probably looking on either coast at some of the VCs in those areas for investment. How do you help the founder? What advice do you give the founder and that founder's team? And how do you make yourself attractive to those VCs outside of the Nebraska ecosystem?
I mean, one of the things that we do is we invest early enough that we're not like formalizing boards and things like that yet, but helping just kind of put some governance in place around what do monthly communications look like, what kind of metrics should you be tracking, how do you put together strong monthly, quarterly updates that you can be sending to these partners that you would ideally like to communicate with 6, 12, 18 months before you ever intend to fundraise from them. Like the last thing you want to do is reach out to one of these large funds that are going to have to do months of diligence and say like, I have 3 months of runway. We're doing a lot of great stuff. Like, can you give us some money? And like, you want them to know about you for a very long time. And so those are things that we help the founders in our portfolio with, is getting these connections, building these relationships early with regional funds, kind of that stair-step approach. There's a lot of funds in the region that are looking at Nebraska and helping getting them connected into into Chicago, into Denver, into Kansas City, St. Louis, building those relationships, and then leveraging those to even stretch kind of the boundaries further. So those are the biggest pieces. I going back to kind of some of the mistakes that founders make, like not communicating with your investors is like the top thing that you can do to fall out a great, like we see so many fail. If we don't hear from you for 2-3 months as a founder, like the assumption is your company's not around. And I think every investor talks to their founders about this. So the founders constantly hear this. And so if you still aren't sending updates, it's like, okay, now it's like double strike. So just that over communication.
Yeah, that's an interesting point, and I think like I say this to some of the companies we work with all the time. Like, just tell us what's going on. I mean, like, even if we're customers, or even if we've been helping you, and even if we're not customers and we've been helping you, and you just disappear, like given the amount of people who want to pitch to us, you just disappear off our radar, and we become disinterested. So that's really good advice. Communicate. I mean, it's always good advice.
Well, we hear all the time, like, we just one more customer and then we'll send the update. Like one more customer, then we'll send the update. But the thing that a lot of times, especially from an investor perspective, founders don't think about is, you know, if you all of a sudden go from like 5 customers and now you have like 40, you might have outgrown where we invest. So like you've been waiting to tell us all this good news, and now you've grown so much that it's like, man, you've gotten to a point where you're a little too big for us. And now this process starts over, because now you're looking at that next tier, and now you're like, all right, I need just 10 more customers to talk to them. And so like investors connect or really look at trends, like, and you have to give individual data points for us to find trends.
Nothing to add there. That was great. Other than I think, tell us where we can help out too. If you're a founder, I think there's times where it's like hesitation to tell you what's going wrong. I think all of us have a strong network to find the right people to connect you with to help with that low light or headwind that you're dealing with at this specific time.
I think that's correct. You're like exactly right. Ask for help. I mean, that's the thing I often say. Like, it is okay to ask for advice, and if you don't want the advice, don't take it. If it helps you, it helps you. But it's never hurts to say, hey, what would you do in this situation, or could you think of a way to help me here?
And to Josh's point earlier, the 6 degrees of separation that exists, everywhere, it's much tighter here. And there's experts that are much more accessible here in Omaha and Nebraska more broadly that can be helpful. And it's always 1 or 2 phone calls away versus 6, which is another reason that building here is so great. I'll answer this a little bit differently in terms of that next kind of capital raise. There's 2 ways to think about it. One would be, when we get to a point of our stage, like at some point there will be a turn to profitability. And most of the time we are underwriting to the fact that you might not need additional capital. But it does happen, and we do follow on in almost all of our deals in this stage. But I think to both of their points, the biggest thing for us, both in our private equity strategy and our growth equity strategy, is communication with the good and bad, and being kind of partners in lockstep with that founding team is something that we pride ourselves on, and we want to know what's going well, what's going not well, and how we can be helpful.
And I think that you kind of answered a little bit of this here, but one of the things that always fascinates me, especially as you go further and further up the scale and get the institutional type investing or larger funds, is the thesis almost always, or maybe a sub set of the thesis includes, hey, we write checks between X millions and X millions or Y millions. And then I go look at the portfolio, and half them are either side of that, so the thesis doesn't ring true there. So just in that vein, how do you make that decision when to when to go in as an institutional investor, and how do you make the decision on what check to write? Is it driven by the founder or the board, or how do you get there?
Yeah, I'll start with kind of guardrail classifications. To your point, they're not hard and fast. I mean, for us, we want there on the technology side to be real product market fit that already exists. For us, that means $1 million of recurring revenue. We would like that revenue to not be concentrated with a couple of customers, so kind of less than 50 or 60% customer concentration within that top 10 would be ideal. How big of a check we write, candidly, we're flexible in the sense of what the founder's goals are. A lot of times I think, VCs on the coast want to pigeonhole you into, okay, you are a $4 million ARR technology company growing at X rate, which means you need X dollars to grow into X valuation. And for us, it's way more about what the founder wants to do in terms of, their exit plan and what they see for the business, what that exit looks like. We do a lot of work on the front end with them on that. And if that sort of aligns, we kind of back in to it at some points in terms of, what makes sense from a capital raise perspective. And again, for us, it usually means, $5 to $10 million to pour fire on an already existing sales and marketing strategy that is successful.
So any of you or all three of you, what can a company do? Obviously, their market's not just going to be Nebraska or even the Midlands. I mean, what can a founder, what can a company do to make themselves more attractive to outside companies being here in Nebraska? How do they talk that one through, and how do they market themselves? Assuming that you're all marketing experts, of course.
I wouldn't call myself a marketing expert, but I'll take a stab at that one. I think for folks, being really, really in tune with your ICP is incredibly core to making sure that all sales and marketing messaging is successful. And we spend a lot of time with folks that have gotten traction maybe in certain different ICPs and trying to understand which one to go attack with this growth capital and why, which one's going to be the most efficient, which one is growing the fastest. Some of that market research is a lot of what we're doing in our diligence process. And how to market themselves here, I think more and more people, at least across all levels of venture capital, are realizing that measured growth is important. And it's kind of what we've always done here in Nebraska versus kind of that growth at all cost mindset that you see on the coast, that 0 or 1 kind of binary outcome. And more and more, most of the companies here have that mindset already, which kind of makes them more attractive to this paradigm shift we're seeing, coastally.
To Charlie's point, get on these investors' radars early. 12, 18, 24 months, just so they're in you're in their deal flow pipeline, they're in your CRM, and you can tell how great things are going through those 24 months to make it more compelling for them to invest in you when it's time for when you need to check. The other thing, I guess, more on the founder front is just know your KPIs, know your metrics. I think that goes a long ways for investors to know, okay, this person is the right person to do the job and to grow this company.
Just the confidence to reach out also. Like, I think too often we hear, just in the Midwest, the mindset kind of is a little bit too humble. We'll wait till, not too dissimilar from the updates. It's like, once I get 2 more features, then I can start reaching out. And you're going to get told no a lot in the early days, especially. So like the more no's you can get, the more you can understand why and get to the yeses. So understanding, like just actually reaching out. The other piece that I think's interesting, some of the companies that have grown here, like Workshop, for instance, is a quickly growing startup here locally, and they just go for it, and they play a volume game, and they understand how many calls they're going to have to make to get how many demos, to get how many customers. And there's just not enough companies to do that solely here. And so they started outside. And to Dar's point earlier about getting kind of some local corporates involved, like they, in the early days, actually had more success by reaching outside the state than inside, because a lot of the large corporations were like, could the best solution really be down the street? And, so after you start getting Nike to agree that your solution is working, like some companies in town will take it a little more seriously. So it can kind of have the inverse effect too.
Yeah, and I believe me, from experience, the best solutions are sometimes right down the street, because we found several of them. So this one we probably didn't talk about, but maybe like a little bit of advice to founders. One of the things I see all the time is a founder comes in and they feel like they're the CEO, the CTO, the salesperson, they're the marketing person, they're the pitch person, and honestly, in some cases, this founder should not be pitching anything, right? It's like the amount of times I see a great product or a great idea and then go, but you're selling it so badly to me. So how do you tell, or what advice can you give to founders to say, look, recognize what you're good at, but maybe figure out what you're not and have other people do that part of the job? And also understanding sometimes you just don't have the money for it, but
I mean, one thing that we talk about with our portfolio all the time is just like we're brutally honest because we want you to be successful. And so sometimes we sugarcoat things here, we dance around that to make sure that everyone should be a founder and your thing's like great, and it's just like, well, we've seen 100 solutions of these and they failed for reasons X, Y, and Z, and you're currently doing one of those things. It would be great if you could go and find somebody to help you in this regard. One of the things we talk about too, it's like maybe you don't have the capital, but finding an individual that you can sell the vision to be a part of your founding team is like one of the hardest but most important sales you can make. If you can't find an individual and sell them on the vision that they could maybe take a little bit of a smaller salary with a huge upside on the potential, it's going to be really hard to get to $1 million, 10 million, 100 million in revenue if you can't sell the vision to a couple people on your team to join you along the way.
Yeah, I think getting that outside perspective is super helpful. If it's not from like an investor, someone that is in that respective industry, or maybe not a friend, because I'll tell you what they like about it, but someone that will give you that hard, honest truth. If that's an advisor or a mentor, that goes a long way for sure.
The way we think about this is, to the point, is adding talent, and that might not just be kind of a co-founder of some kind. I mean, usually for us, the most important hire a founder can make, especially on the technology type of business, is the first sales hire. And getting that right can lead to a lot of compounding over time. Customers can help you inform product roadmap, especially early on. Talking about the corporate stuff we were talking about earlier, that's something that we tell folks. I think honesty is the best policy across the board, and Omaha, Nebraska, nice is a real thing, and making sure you kind of cut through that and have a real hard conversation at times is important too.
All right, so let's talk a little bit about Nebraska. Like, we are Tech Nebraska. We're hopefully all members of it. If you're not, please sign up. We need your money. But our goal here is to literally lead the way for tech in the state of Nebraska. It's to create an environment where startups and other tech companies and other companies like mine, which aren't historically recognized as tech companies but are. So what we want to do is create a great environment. We want to convince people that this is the place to be. So what do you guys think? Why is Nebraska a good place for tech companies to be?
There is great business in Omaha, in Nebraska, and there are great companies being built everywhere, and that's a huge thing that I think a lot of people on the coast miss, to the point, there might be the best solution down the street, but it really might be the best solution. Thinking about the things that we do well here, really, really good at scaling efficiently, sometimes with limited capital, which again, kind of in the last 2 or 3 years is really, really important for startups. That capital efficiency metric, your amount of capital you've raised to the ARR you have, kind of was thrown out the window for a while when money was free. And I don't think that's the case now. I mean, I think, things that we can continue to work on are, not...
Was your money free, Jack, at one point?
Definitely not.
Yeah, I didn't think so.
But anyway, I think some of the things that we can be better at here are continuing to, again, be confident in what we're building here. I see so many, meet with so many early stage businesses that say, okay, I'm kind of building in stealth, or I've been working on this problem for 2 or 3 years, but it's okay to build and break stuff and try again and experiment with customers, that sort of type of things. That's what gets companies off the ground. At least that's how we think about the world.
Yeah, nothing really else to add other than it's cheap to live, relatively cheap to live here. It's a great place to grow up a family, raise a family, and it can be done too. I mean, you look at the Huddles, the company cams, the Tenaskas, Nelnets, all of those were built here, and so it's possible, and it just takes that motivation and drive and grit to get to those spots.
Well, and part of the lack of capital that kind of, or limited capital that was available, really kept kind of Nebraska and a lot of the Midwest companies, at least at the stage we were investing, when money was free, 2020-ish, that the valuations and stuff stayed pretty consistent here compared to the coast. And it seems like the coasts are kind of coming back and really reinventing themselves in a way that models what we've been doing here. One of the other things that's really interesting from the stage that we invest at, rather than starting, you go through Y Combinator or something, and you're starting at your company valued at $30 million, there's not a lot of off-ramps when that's the starting point. And so the failure rate being even more severe out there than here, a lot of the companies we see are starting, raising some capital in the $3, $5, $7, $10 million kind of range. It allows you to grow into something and provide a lot of off-ramps that are interesting, that you can make some generational wealth without having to have the $5, $10 billion exit that you might need in San Francisco or New York or something like that. And so just the starting point is an interesting leverage that we see.
I think that's an interesting point that I didn't think about before, that the coasts are becoming more in line with what you've been doing all along, which is valuations are more realistic and checks are more realistic in terms of size. And honestly, that resonates with me because I've been talking to a company recently, and I just saw the valuation they're going to put on their series, their first series. They haven't even decided if it's going to be a Series A, and I'm like, damn, that could be a good investment right there. I mean, it looks realistic. So why are the coasts? Why do you think that's happening? What are they figuring out, or what do they now know that you guys have known for years? Did you sell them some intel?
I mean, I think it's just kind of the cycles. When the money was free, it goes. If you have $100 billion to deploy, and you're putting 50 of it into something, the denominator, the valuation of the company, just has to balloon to fit the investment. And people were trying to shove money into these deals that force the valuations to go crazy. And I think the founders are getting to a point now of, we don't need to have their back against the wall and take these huge numbers. If they can give up less of their company, if they can take less of their money, like that's more of what I'm seeing.
Yeah. You guys keep saying money when money was free. How many founders here think there was ever free money around? Because it might have been cheaper money, but it was never free, guys. All right. So think about, as Chris Dill mentioned earlier, and I know there's been a lot of sort of press and a lot of stuff on LinkedIn and other social media about the Business Innovation Act here in Nebraska. So if you think about the things that Nebraska does really well and could do better for startups and for a startup community to thrive here in Nebraska. But let's just talk about the BIA for a minute. I think it's top of mind. It's something we should all be very, very concerned about, and we should all get our weight behind to support not repealing the act or getting rid of the law. So I don't know if you guys wouldn't mind talking about that a little bit, just the importance of it and what it means to startups here, because I think it's really important.
I mean, the BIA has been just absolutely transformative for the state of Nebraska. It's been hands down one of the most successful government programs that we've had. I mean, returning $14, $15 on the dollar of taxpayer money is like a crazy successful government program.
It's almost too successusful for government. No wonder they want to get rid of it.
We joke about it all the time. It's like, man, I don't know. Can all programs be this successful?
I get it. Yeah, now I understand why they're. Yeah.
If all government programs could be this successful, we got to get rid of this. There's so many times where in Nebraska we're looking for other ideas in other states that we can implement. What's Iowa doing? What's Illinois doing? And this is a program that's been around for 12, 13 years that other states are stealing from us. Like, it's just crazy to me that we're in the process of potentially sunsetting one of the most successful programs we've ever had, while the states around us go ahead and implement what has been so successful here. And one of the pieces that, from an investment perspective, especially at the stage that we invest, that maybe isn't really thought of. I mentioned at the beginning, 75% of our deals that the founders that we've backed have been here in Nebraska. A huge chunk of those have gotten a prototype grant where a 50 or 100K check from us is able to be matched in that way, and they essentially are able to get double the money without diluting the founder in a way to get more businesses off the ground. So one, that's super, super helpful to just get more companies started here. It's the single way that will create the most amount of jobs in Nebraska is through companies like this. But the other piece that is maybe a downstream effect that maybe hasn't registered, if the BIA goes away, we've already kind of modeled out what in Fund 2 that looks like. And we essentially are incentivized to have our model flip, where 75% of our deals would be invested in Indiana, where we can get 10K back on every 50K that we invest. So if it's like, if I can invest in a Nebraska company and I don't have a prototype grant match, or the exact same company is being built in Indiana, I have a fiduciary duty to my investors to find the best deals. And if the best deals all of a sudden are outside of the state of Nebraska because we're not supporting founders and startups in the way that we have before, just like logically doesn't make sense for us to deploy the capital in the ways that we have. So that's one of the biggest issues that we see from an investment perspective, is just like our hands become tied. We want to support founders, but same with Jack, it's not a charity that we're investing in these companies, and so finding the opportunities to support founders in the best way. I mean, BIA has hands down been the best thing that we've had in the state.
Yeah, double down on that for sure. So Nebraska Angels was originated in 2006 to just as an economic development membership-based nonprofit. So a few members who started the group, his main goal was to fund local startups and then fund local talent so they stay here in their state, if that's their kids, grandkids, cousins, uncles, whatever. So just looking through like the past 10 years, 15 years of the BIA and then how our group has grown, it's crazy. Like, we started off with only investing in 4 deals before BIA, and now we're all the way up to 10 new deals and like 10 new follow-on deals into our portfolio companies as well because of that program. I think in terms of like tech talent, and I would consider myself a young professional, like the startup ecosystem is so exciting to be a part of because it has that buzz. It has that grind of, okay, we could build something big here in Nebraska. It is pretty attractive to go out of state to find a new job in Chicago and New York and California, and not to hate on people that do that, but like to see that here in Nebraska is super powerful. And honestly, that's kind of the reasons that I'm still here in the state, trying to support startups and trying to find more investors to participate and support our group.
I'll take a little bit from kind of us being, upstream from a little bit. I think it's really important for the ecosystem to be healthy. Here, I mean, for us, we do have investments coast to coast and candidly a few internationally now. But investing in Omaha in the state of Nebraska is our favorite thing to do. And some of our best, success stories over the years and current, awesome performing portfolio companies are here. And so the health of the ecosystem is really, really important. And we want to, obviously make sure that continues. And it's really, really been fun to watch. I mean, since I got here to the state in mid 2010s, how much it's grown and how many kind of opportunities are here now for growing companies, which I think is really, really unique.
So we talked about the BIA, and I think if what those answers don't give us all, a reason to go support it in every way possible, and you'll hear more about it throughout the day, I'm sure. But then just talk about what else could Nebraska do? Like what's missing from the startup or private? What could we do to make this a more attractive place to bring companies in? But to your point, have these very, very smart people not leave the state, not head for New York, not head for Chicago. So what can we do?
I mean, just to kind of finish up on the BIA thing really quick. I mean,
Go.
The Invest Nebraska piece too, like the impact that Invest Nebraska has had in backing companies at the seed stage to even make sure that M1 can get a look at them, that these companies can stay around. I mean, we've had successful, Company Cam raising at the valuation that they have and the impact that they had and the amount of millionaires that they've created in the state just in the last couple of years wouldn't happen if the BIA isn't around. And the team at Company Cam would be the first ones to tell you that. And they're just one of many because they sit up on this pedestal being a recent unicorn in the state. But the impact of what that gap and what that vacuum looks like is something that we really need to think through as a state before we really impact it. The other piece that I would add to what we can do is, more capital. There's room in almost all of these deals. We're still filling, we're writing checks into early stage Nebraska companies, and we're still reaching out to people from other states. There's, a ton of investors in South Dakota and Chicago that are getting access to phenomenal deals in Nebraska. And when those companies inevitably go and be successful, we're going to send a ton of capital to South Dakota, to Chicago, just because people aren't writing checks here into these companies. And the wealth that could be created in the state is essentially being shipped outside of the state. But the other piece that I would add is just awareness. So we sit in a lot of rooms with a lot of people that support entrepreneurship. And one of the challenges that our team always asks is, what are let's go around the room. Who can name their 3 favorite startups that are under 5 years old? And the majority of the people that in the room want to support entrepreneurship haven't looked into what startups are even getting created here. we've looked at over 500 companies in the last like 18 months in Nebraska. And most people, I think, would assume like, I don't know, are there 25 startups here? And there's tons of them. And so just becoming more aware, finding logos of companies that are being there. If you can be a customer, be a customer. If you have someone in your network, it goes back to the 1 degree of separation. It's like, if you know someone that you can help be a customer and support these, I think the awareness piece of just what's being built here is like the top thing we could do outside of capital.
I would say, I guess, it is, let's take it seriously. I mean, we do have a few billion-dollar companies that are startups here in Nebraska. So it is a real good investable, I'm not, my lawyer, I don't know, whatever. I don't know if I can say that. But it is like, take it seriously, I would say. There are a lot of great companies building, a lot of great profitable companies building, and I think there's a lot of value of pouring into these local startups.
Awareness is obviously important, but I'll go back to the corporate connectivity piece. I think, outside of the state, we often run into businesses that got off the ground from, again, one early big corporate investor or corporate customer that kind of helped them get started. And again, that sort of informs roadmap and really gives real boots on the ground industry insight to these founders. And I think it's really important. And it's not just, again, being a paying customer, but a beta customer that has the ability to work with the business early in its infancy to help it kind of get off the ground. It's really important, and to both these guys' points, there's a ton of great stuff being built here, and it still shocks me sometimes that people, don't know about it. But it's really, really fun, again, to see the community continue to grow, and I think we're on the right path for sure.
Okay, so we're sort of running out of time, but I do want to talk about exits, right? So, and Jack, probably start with you because you're probably the one closest to that exit. But so when's the time to start thinking about an exit? When do you guys encourage people to start thinking about an exit? What's that point?
We are certainly talking about an exit at our stage before we make an investment, and we want to understand sort of where the founder or co-founders want the business to go, what type of legacy they want to create. Do they want to go along with the next buyer? What does that look like? Do they already have strategic interest from other investors? And to the point others were making up here, the off-ramp ability, given valuation expectations and sort of that cadence here in the state of Nebraska and the Midwest more broadly, makes it a lot more flexible. Not every business needs to IPO. IPOs aren't perfect for everyone. I know every founder, probably their first day is like, oh my gosh, I'm going to grow this to $1 billion IPO. It's going to be great. And they're really complicated and take a long time. But anyway, that's sort of kind of the things that we're thinking about. Again, like when we are investing before we make a deal done, get a deal done.
Similar to talking to investors early, also talk to those potential acquirers earlier in the process than maybe you think you should.
That was a good answer. Sure.
I don't really have much to add. We just from a fund perspective, at the earliest, we're not like making investment decisions and expecting founders to have exit plans. Like, we honestly want to find people that are excited about growing something really big, and the exit kind of takes care of itself because we're so early. But we do want to have ability to underwrite, and does this thing have a opportunity to potentially 100x? But it goes more back to what's the TAM look like and how big could this thing get than it is actually like exit opportunities. So
just follow up on that, and absent the return on your investment dollars, what does a good exit look like for you guys? What do you, at the end of the day, when the exit's done and you sit down, you said, that was awesome. What does it really look like absent the dollars? Because we know that's what, that's part of why you're doing what you do.
I mean, we make every investment into our fund, assuming that one company could return the entire fund.
That's awesome. All right. Anything else? Any closing comments or thoughts from anybody about anything except AI? I'm just over AI for the day.
Call, email your senators, talk to them about BIA.
Yeah, that's a good one. All right, so founders in the room, if you don't know these guys, you need to know them. I personally want to say, I talk to a lot of founders. I talk to a lot of startups, and I very rarely run into one who hasn't or isn't speaking to one or all of these guys. So the work that they're doing in the state, in the area, is phenomenal. So big round of applause for them. And if you don't know them, get to know them. Thank you, guys.